Hi everyone, it's Grace. Welcome back to my channel. I know that there's a lot of debate out there saying that there is no crash, but guys, you need to look at all the market signals which says that a crash that's very similar to the 1970s is already underway. On my channel, I only present the data and facts and speak the truth, so you need to pay special attention about the things that the media doesn't say and doesn't want you to find out. The market is highly volatile in the fourth quarter of 2021, and Zillow's home flipping disaster proves that a housing crash is already happening. So today we're going to see why Zillow is making an even bigger fire sale in many of its hot real estate markets, that it overpaid so much and hoping that speculation will flip its profit, but ended up in a very messy situation. And we're also going to look at the real estate technology companies whose stock have absolutely rocked bottom for the past few days. Before we begin, remember to subscribe to my channel and click on the bell button so you get notified immediately when new videos are uploaded. Also, feel free to give this video a thumbs up if you find it useful. On November the 1st, Zillow made a shocking announcement of the fire sale of 7,000 homes of a total of $2.8 billion. And that's not all. Just 10 days later, it makes another announcement to start selling 18,000 homes that it had already bought or still in the process of buying through its iBuying program. Out of the 1,800 homes, it already owns 9,800 homes, and the rest of the 8,200 homes was still in the process of buying. It's very clear that Zillow wants to dump these properties as soon as possible, and dumping some of the properties even before the deals are closed. Its home flipping business proves to be a total disaster because at this particular point in time, a housing crash is here. Earlier last week, allegedly, Zillow will be selling the 7,000 homes to BlackRock. And I did a poll earlier asking you how much Zillow will be able to sell them for. 18% of you voted $2.4 billion, 35% voted $2 billion, 19% voted $1.4 billion, and 28% voted $1 billion. This is a very interesting poll because it is unknown how much an institutional investor such as BlackRock is willing to pay. So let's look at some data and we'll be able to have a better understanding of what's going to happen next. In its third quarter shareholder letter, Zillow reveals that it flipped 3,000 homes, which it sold for $1.1 billion and bought for $1.4 billion. And the other costs include monthly expenses of $6.4 million, which doesn't include loan principal and interest, selling costs of $40.4 million, and interest payment of $6.3 million. So for the 3,000 homes that it flipped during this time, it incurred a total loss of $298 million, with an average of $93,000 per home, with a loss of 21%. When we look at the 9 months income statement throughout the first 3 quarters of 2021, the loss was at 8%, with each home losing $34,000. So clearly it shows that the housing price in third quarter is coming down much more than before. So if we take into account the 21% loss into the pricing perimeter of the $2.8 billion, it should be sold for not more than $2.2 billion. And here's the thing. 21% is the number in third quarter. Now in November, the scale of the price drop is even greater. So the final sale price needs to be less than $2.2 billion in order for an institutional investor to presumably make a profit. But now that the housing price is coming down, why would any investor buy high and sell low? It doesn't make any sense. Some of you mentioned that Zillow will sell the 7,000 homes to BlackRock and recoup most of the money. So let's take a look at the balance sheet of BlackRock and see where it's at. Its liabilities to assets ratio, accounts receivable excluded, is at 76% as of September 30th, 2021 versus 78% as of December 2020. Its total assets reduced from $176 billion to $169 billion, and total liabilities reduced from $139 billion to $131 billion in the same period. If you remember from China Evergrande that its liabilities to assets ratio is at 83% due to over-leveraging. It defaulted on its loans and its bonds were downgraded to junk bonds. Not only that, it's now selling private jets to pay off the debt. So BlackRock is reducing the size of its balance sheet to avoid the same mistake that Evergrande has made. So it's not in the best interest for BlackRock to increase its balance sheet and liabilities by $2.8 billion now. So let's look at what's really happening on a deal table. On November the 10th, it's reported that Zillow will sell 2,000 homes to Pretty Young Partner, the largest single-family rental corporate in the country. But the final sale price is yet to be announced. And here's the logic behind the bidding. Zillow is clearly desperate to get rid of the inventories. So why would an investor pay more if it can pay less, given that the rental price is capped at the same rate? And the 2,000 homes must be renovated already. Given this, we can have a pretty good idea that investors would be underbidding to reduce the initial capital investment, if a deal ever happens. But since the housing price is dropping, any investor who is taking over some of the inventories that Zillow is holding is probably doing a favor instead of making a profitable business decision. Then let's take a look at the stocks of the real estate companies who have exited the home flipping business or iBuying program. The top 3 iBuyers include Zillow, Redfin, and Opendoor, and all of their stocks have absolutely rocked bottom. When Zillow announced selling of 7,000 homes on November the 1st, Kathy Wood originally bought at a dip, but after Zillow announced layoff of 25% of its employees, she immediately dumped $376 million of Zillow stock, causing it to fall to $65 per share. Remember, back in February 2021, it was valued at more than $200 per share. This is a major market signal that a housing crash is already happening, and you may not be aware of it. Redfin and Opendoor stock also follow the same pattern as Zillow. At its peak point, Redfin stock was worth $96 per share around this February, and now it's worth $47. So that was more than 50% drop. Opendoor was at $35 per share in February and is now worth $19 per share. Although the drop is not as bad as Zillow and Redfin, the real estate company stocks are all hitting bottom, and it's only going to get worse. In last week's video, I mentioned that one of the reasons why Zillow is making a nationwide fire sale is because it's facing antitrust lawsuit from Rex. And here's what's most likely happening now. According to Rex legal representation, through horizontal agreements, 3 of the most highly visited hubs, Zillow, National Association of Realtor licensed Realtor.com, and Trulia, now provide virtually no visibility to homes listed by brokers outside the market-dominant cartel. It means that this kind of behavior is discouraging market competition. In this part, I'm going to be using the data from Statista to show you what the market share looks like. Out of all the real estate companies, Zillow, Trulia, which is now part of Zillow, and Realtor.com have a total of 77 million monthly visits, which take up 62% of the total of 123 million monthly visits of all the major players in the market. So most likely, Zillow is probably not going to win. Besides legal fines, its market share will also drop. If we look at Zillow's balance sheet, its listing exposure business, aka IMT, is a sustainable and successful business model, and the cost is only about 10% of its revenue, and the cost revenue structure hasn't changed much compared to 2020. So if Zillow lost, its market share of the website listing exposure will go down, and its IMT revenue will also go down. It's facing both the market risk of a housing crash and a policy risk of antitrust law regulation. This explains why Zillow is pulling out of the home flipping sector entirely, and we're going to see more homes hitting the market. So this is today's video about Zillow's 18,000 homes fire sale and the real estate stock rock bottom. In the next video, we're going to see where the fire sales are and how you can navigate in this market. As always, thank you very much for watching, and I'll see you on the next one.